Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a second bearish black crow yesterday, and the lowest low and low close since mid-November last year. It seems the tension of recent days has finally given way, with not only the second consecutive close below the lower trend line, currently at 108.64, of the October 2023 to date broken bull channel, which is highlighted in green on my daily chart, but also the flatlining long moving average, currently at 108.33, highlighted in gold. It was also a first close below the flatlining medium moving average, currently 107.84, highlighted in mauve on my daily chart, and we even managed to close below the May 2020 low at 107.66. It was only the April 2020 low at 107.25 that halted the flow lower, much as it did back in early December last year. Looking further down, the next support of note is the 2020 low at 106.36, then congestion at 106.13, and the April 2017 low at 105.68. Overall, this market is still declining after reaching up in late December to the harder to reach secondary target at 111.11 of the July to October 2023 bear channel. It might be premature, but I think it right to lay out some possible targets below for the move lower from the broken bull channel. So I'm not even sure about that, but let's go ahead anyway. Thus, the primary target X is in the 106 even zone, with a secondary, harder to reach target X1 in the 104.50 zone. So far today, indecision. As if the market has suddenly realized just what it has managed to do and is a little bit insecure, though not insecure enough to not test down to the April 2020 low again. Cable, aka sterling against the US dollar. A second bearish black crow yesterday, and the lowest low since early December last year, and the lowest close since late November last year. It was also the second consecutive close below the flatlining short medium moving average, currently at 126.71, and the first close below the flatlining long moving average, currently 125.62. However, perhaps more importantly over all this, it was a first close below both the dark blue highlighted lower time, currently 126.11, of the shallow November to December 2023 bullish shift pitchfork, and the large recent 50% Fibonacci line for the July to October 2023 move at 125.90. Whilst it's only a first close below really both of these, it may be early, but I feel it might be worthwhile detailing some potential targets for the break below the bullish shift pitchfork. Thus, I would suggest a target X down in the 123.5 zone. This is below the next significant support, which is the slowly rising medium moving average, currently at 124.76. Finally, this action retires the idea of a late August to date potential cup with handle formation. Now, I was not wedded to that idea, as you know, especially as the handle became more of a handle of a saucepan rather than a cup, so now it is gone. So for today, a small reactionary move back up to the overhead long moving average, but that's been all. Euro sterling. A third and much larger bullish white soldier yesterday, and a very significant break higher. Prices punched up and through the following, closing over all of them. The upper time currently at 85.38 of the late November to late December 2023 bearish Andrews pitchfork, which is highlighted in dark blue on my daily chart. The December 2022 low at 85.45, also, and the somewhat unusual reinforcement of the declining short medium moving average, currently at 85.57. This is all becoming a repeat of the actions we saw back in June, July, August and September 2023, when prices penetrated support of the December 2022 low at 85.45, but were unable to exploit the move down, and eventually prices retreated back up. So please continue to keep your eye on that upper time and short moving average combination, as well as the December 2022 low. Unsurprisingly, the move up stalled at the overhead early December congestion centered around the 85.68 to 85.72 area. Now, so far today, a reactionary move back down, back below the short moving average and approaching the December 2022 low 85.45, but so far it is just a reaction lower and not a re-emphasis of the bearishness we have seen this year. However, I caution once again, as I have done recently, beware of false breaks here. US dollar against the Japanese yen. A second bullish white soldier yesterday and a follow-on to the previous session's bullish engulfing pattern. Interestingly, it was the highest high and high close since late November last year. I am still cautious, however, about whether the market is really trying to break away from a fourth week of hanging around the flatlining medium moving average, currently 147.47. Now, I've previously argued that we might be in the hesitation phase of a possible late December 2023 to date bullish halfway hesitation. This is a possible pattern, or shall we say, one interpretation of recent events, but it's not confirmed as yet, and given yesterday's limited move higher, it remains unconfirmed. Overall, we are settled within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork highlighted in purple on my daily chart. We are in between the lower time below, currently at 142.55, and the middle time above, currently at 156.63. We're additionally close to the underside of the middle time above, currently at 149.94 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. So far today, well, not much, looking like an indecisive doji cross right now. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier, and honestly a small follow-on higher to the previous session's bullish white Mariposa. It was nevertheless the second consecutive close over both the May 2020 high at 719.64 and the ever so slowly rising long moving average, currently 720.53. However, the move up did eventually test the next significant overhead resistance, and that's the flatlining medium moving average, currently 722.45, and failed to make a dent in it. We will obviously soon be heading into the quiet time of Chinese New Year. Kung Hee Fat Choi to everyone. In the, I think it is the coming year of the water dragon. However, this move up is an interesting development. My concern may just be that an interesting development is all it is if it fails at the medium moving average. So far today, well, a strong reactionary move back down away from the overhead medium moving average and back down through the long moving average and testing the 2020 high from above. It may have just been an interesting development. We'll see if it fails. US dollar against the Mexican peso. An indecisive spinning top yesterday for a long tongue on top that reached up to the slowly declining long moving average, currently 1729.70, and obviously didn't like it up there once again. It could also be seen as day two in a meeting lines pattern. Now, this particular pattern is traditionally seen as bearish. However, in reality, about half the time it ends up being a bullish continuation pattern. So it'll be interesting to see which way the market treats it, following tradition or the data. It was also a close below the flatlining short medium moving average, currently at 1712.13, which might just sway it. Below is the March 2016 low at 1709.23 and the April 2016 low at 1703.89. Despite this attempt lower, the action once again shows how prices are still within bands of support and resistance. Now, overhead, we have the flatlining medium moving average, currently at 1740.50. The July 2017 low at 1743.62 and the August 2017 low at 1756.93. Meanwhile below, well, I've already detailed what is below. It seems the market is still searching for some cause or direction to adopt. I just keep a weather eye open on the idea of a January-based small bullish halfway hesitation. Now, I've not marked it on my daily chart as it's not that good looking right now, but it might still be there. So far today, a lower open, still just over the short medium moving average, but pushing down below the March 2016 low, but not really much further right now, and looking a little bit like an indecisive doji cross at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.